Today's topic is really important. It has to do with the essential role that your life insurance plays in your estate plan. Okay, and start off with an example. I was recently doing some market research, came upon a well-known stock market-based advisory service, and a gentleman was there stating that he didn't feel that life insurance is necessary unless there are young kids living in the home. I guess that he was operating under the presumption that life insurance is only good to replace your income in the event of death and if you have dependent beneficiaries. Here at IND, we would say that that's a bit short-sighted, or a lot short-sighted, and today's video is going to address exactly why. First, if you're here, we'd love it if you'd click on the little thumbs up and join the movement. We'd love to have your support, and we'd also love to hear from you on any topic related to all things estate planning, life insurance, asset protection, strategic wealth building, charitable planning, tax planning. Anything that you want to know about, please let us know, and we will make every effort to try to address that topic in one of our upcoming videos. So with that, let's get started on estate planning. First, you need to know that there's some things that are misconceptions about estate planning. Biggest one is that estate planning is only for the wealthy, and in fact, more modest estates are more vulnerable to a lack of planning. Okay, they can be more affected by financial issues that come up, disputes, and anything in between. And so it's important to have a plan. If you don't have a plan for your estate, then your home state has a plan. Usually the state's statutory plan is very stark. It's very impersonal and often does not agree at all with what the person would have had happen to their estate assets. So it's important to have a plan. How do you have a plan? First step is having the right documents. Okay, so you're going to have a number of documents that are associated with every estate plan. First or last will, you probably heard of that one. Charitable power of attorney for disability. Health directive documents, which appoint people to make medical decisions. Any guardianships for younger children or possibly aging adults. And then most estate plans have a trust of some kind in order to avoid probate and to simplify the distribution process. Okay, whether that trust is revocable or irrevocable depends on a strategy question, which is outside of the scope of today's video. So with that in mind, though, we are going to ask a few questions. One, what constitutes a good plan? The right documents. Also, along with the right documents, you need a strategy or a plan to create a seamless transition of assets to future generations, beneficiaries, whoever is designated. Okay? Sometimes you can have that laid out in the documents. Sometimes you need other aspects of your plan in order to accomplish that, and life insurance is a big one. Okay, so we're going to talk about how does life insurance fit into this picture. Well, life insurance fits in because it provides two things. Okay, number one, liquidity, and number two, legacy support. Okay, so liquidity is the most obvious one. It's the one that's thought about for the most part when it comes to life insurance. And liquidity has to do with making sure there's enough financial resources to cover whatever contingencies arise. Okay, and what contingencies typically arise? The estate expenses, the final expenses, funeral expenses, hospital bills, taxes, income taxes, potential estate taxes for some estates, other costs such as travel costs for family members, key family members, legal and tax professional costs for any administration, and it could be a number of other things, business succession, if assets need to be sold, there are costs that arise. So all these unforeseen costs play into the mix, and liquidity is an important component that life insurance bridges the gap for. And so that's essential, it's critical, and often missed. Even more so on the legacy side. The legacy side of your estate plan is the one that many people don't think about, and it has to do with accomplishing and embodying the values that are important to you. For example, if you want to have future generations get education, those are things that can be accomplished in a legacy plan. Charitable intentions, whether it be the arts, medical, you name it, these are part of your legacy plan. Okay? Business succession, making sure a family business follows the right chain of of possession and ends up with the right person to operate that business successfully. Maybe that's a person outside the family, maybe that's a key family member, and life insurance facilitates that oftentimes with a buy-sell agreement of some kind, or just provisions within your documents to direct that. Okay, so all these aspects of a legacy plan are covered, and the liquidity aspects of your plan will then flow into your legacy and help make sure that that part of the plan is protected. Okay, so that's really important. What kind of life insurance should you use for your estate planning? That would depend on a few factors. Number one, maybe it's budget, but maybe it's the size of estate, maybe it's the kinds of things that are happening in the estate. So I'll just go through the various types and offer some pros and cons for now so that you can have some parameters to work with. Okay. First, term life insurance. That one relates to my example at the beginning. Term life is the cheapest kind of insurance, and basically you're just paying for a death benefit within a specified term. Okay, so that can work to accomplish your liquidity and legacy goals if as long as the person passes away within the term. Remember, terms are limited; they do expire. And here's a dirty little secret: life insurance companies know that oftentimes, most of the time, the term expires and that death benefit is never used. So what does that say for your estate planning? It says that those proceeds, by the time a person actually passes away, that they may not be available to the estate. Okay, that's the downside of any kind of term life product, basically renting a death benefit. And you have permanent insurance, which we talk a lot about on our site. You have different kinds. You have market-based life insurance. There are sort of two broad categories, and then you have whole life. Okay. Among the market-based types, you have things like the universal life policies, indexed universal, or you have variable life, which is more market-based, like a mutual fund within a life insurance policy. These can be very good. Oftentimes, they have flexible premiums, so they have more flexibility than a whole life product, say. On the flip side, there are a couple of downsides. One, costs within these policies can escalate. They can create a burden upon the accumulation within the account. And two, the flexibility of the premiums can lead to underfunding. If the premiums aren't paid for a period of time, these policies can become underfunded, and this has actually happened with some of these products in history to date. And so that can jeopardize the proceeds for the estate and create complications with the plan. Okay. Another category, of course, and we advocate a lot on our platform here, is whole life. Whole life is probably the most stable of all the various types because it offers a permanent death benefit. It's a fixed premium plan, so the real downside is just less flexibility in whole life. And there's a need to make sure that the premiums can be paid during the whole premium period, whether it is 7 years or 10 years. That those premiums should be paid up, and that secures your death benefit and covers the estate effectively, and in many ways most effectively. And again, all this depends on the goals. The important thing is to consider the role and the need for appropriate life insurance within the estate planning as a support system for the plan. Okay, so with that, you have some parameters, you have some new ideas to consider how life insurance can integrate into your plan. If you decide to take steps, I encourage you to find seasoned experts to work with. And with that, we will look forward to connecting with you soon.